Welcome to BG Adventures. My name is Bradley.
Hi, and my name is Gianine, and today's life adventure is adulting. We're here to discuss with you the different factors that contribute to a good credit score.
Now, we don't claim to be experts on this subject, but we do think it's an important topic to discuss. Maintaining a good credit score and a good credit history in general will allow us to secure the mortgage rate that we want, because we would eventually like to buy a home together.
We also love to travel, so having a good credit score help us get approved for those credit cards with really good travel rewards. But before we get right into the different factors that contributes to a good credit score, let's talk about what a credit score is.
Now, a credit score is a 3-digit number varying from 300 to 900 that indicates to a creditor how likely you are to pay them back when you owe. Let's say you have a low credit score between 300 to 500 perhaps. If you were to apply for a car loan, a bank might think that since you have a low credit score, you might have a really bad credit history, that you applied for a lot of credit previously. If I were to apply for a car loan at that bank, they might not approve my application because they may see me as a risky client and I might default to my loan. If I had a high credit score, that's a good indication that I have a good credit history. So I've been paying my bills on time, I don't apply for credit often, and I'm just generally responsible with money. That must also mean that I'm less likely to default on my repayments.
Now, we also want to preface that being approved for loans or credit cards is not solely based on your credit score. Think of your credit score like your Tinder profile, for example, except banks are the ones that are swiping left and right. Without looking further into what kind of a person you are financially, your credit score does give them a good picture of how responsible you are with your credit. With all that said, every lender or credit card issuer has their own methodology of determining your credit worthiness, and looking at your credit score is just one of them. So now, diving into the 5 factors that contributes to your credit score. The first factor we'll be discussing is your payment history. Of all the factors that we'll be talking about, this is the simplest one and also the most important one because it makes up 35% of your credit score. What this means is that if you don't pay your bills on time, that could negatively impact your credit score. So conceptually, if a lender looks at your payment history and they see that you've been consistently paying your bills on time, your credit card, and any amount that you owe, they are most likely to lend you money because they feel comfortable that you're gonna pay them back of what you owe them. Let's say you missed a credit card payment, a loan payment, or a phone bill. Don't panic, just relax. Pay your bill as usual or pay it as soon as you can, as most banks or credit card issuers don't report late payments to credit bureaus. Credit bureaus are those organizations that collect the data needed to calculate your credit score. So, as long as you pay your bills within the 30 to 60 or 90-day time frame, you should be fine. We do want to flag that we don't encourage you to not pay your bill on time. As a matter of fact, you should always pay your bill on time if you can afford to, but we also understand that there are circumstances where you can't pay your bills on time. So in that case, try to pay at least the minimum on time.
Now, the next factor that determines your credit score is credit utilization. This is typically the percentage of the amount that you owe versus how much credit is available to you. So let's say you have 3 credit cards whose credit limits total up to $10,000. And if I spend $3,000 using a combination of those, my credit utilization in this case would be 30%. The higher this percentage gets, the lower your score will be. So always try to keep this percentage as low as possible. It's pretty important as this factor makes up 30% of your credit score.
The third factor that contributes to the credit score and it's worth 15% is the length of your credit history or the average age of your accounts. So what this means is the longer your credit accounts are, the higher your score will be. So say you have 3 credit cards again. One is 4 years old, the other credit card is 3 years old, and the third one is 2 years old. The average age of your accounts would be 3 years. Now, let's say you sign up for a new credit card. Your average age of accounts would actually go down and it will have a temporary impact to your credit score. Don't worry so much because the 65% that contributes to your credit score, which is your payment history and your credit utilization, is within your control. So as long as you make sure you pay your bills on time and you keep your credit utilization low, then you should be fine and it should help increase your credit score over time.
The next factor of your credit score is recent credit applications or recent credit inquiries. This makes up 10% of your credit score. What this means is that the more credit applications that you apply for in a short period of time, the lower your score will be. When you apply for a loan or credit card, the creditor initiates what's known as a credit inquiry. Now what that means is that they go to the credit bureaus and they ask them for your credit report. And they take that data from your report and they determine whether or not you're creditworthy, meaning they assess whether or not you're worth the risk that they're about to undertake by giving you money or giving you a credit card. The more recent inquiries you have in this short period of time, the lower your score will be, but not by much because it's only worth 10%. So from the bank's perspective, if I got a credit report from a guy who's getting a car loan, and I see on the credit report 5 recent credit inquiries, I might look at that and think to myself, hey, this guy's been going to every bank applying for loans because this guy must be in a desperate situation and he needs the cash and he's just trying to get money. If I were the bank, I would think to myself, hey, the more credit inquiries that he has got, like it might be very hard for him to pay all of that new credit back.
Alright, so the last factor that contributes to your credit score is what we call as credit mix. And it is also worth 10% of your credit score. So what this entails is the credit accounts that are available to you. So credit cards, mortgage loans, credit loans, car loans, you name it. But we don't necessarily mean that you can just freely open up credit accounts because you shouldn't be opening credit accounts that you can't manage and you don't need.
This is not a factor that you should be worried about because it's only worth 10% of your score, and we don't really recommend you diversifying the type of credit you have just because you want to keep this portion of your score higher. Like it doesn't make sense for me to get a loan if I don't need one, right?
Well, there you have it. I hope this is some valuable information that could help you and your future self.
Don't forget to like and subscribe.
Also, if you didn't quite catch what Bradley and I were discussing in this video about the different factors that contribute to a credit score, I also wrote a blog about it and I posted it on my website, JanineMapula.com. I'm gonna leave a link down below in the description box. Feel free to check that out. Subscribe, comment, like, share. Give us some love. See ya.
See ya.